Good morning, everybody. Welcome back to the Opportunistic Trader. We're now joined by Angie Setzer of Citizen Grain. She's been joining us regularly to talk about the ag market, give us some insight on what's happening. And right now, where it's a busy day, she's been busy with the markets, and obviously post this G20, everybody wants to know what's going on. And so let's start with that. How's it going, Angie?
Well, very busy, yeah, and it's definitely a good day. We've been kind of downtrodden in the ag sector here for the last several months, and so it is nice to be trading at the levels we're currently trading at on the January beans here, and then corn's back up towards its recent high as well. So no complaints on this end for sure.
So I would have thought on soybean side we'd be up more than 2% given the optimism that the media and the administrations are talking about based on a deal.
Yeah, and I think that was kind of the common idea is that we were going to be much higher than where we are right now. I'm not surprised by where we're trading, by the fact that we're just not really seeing that upside. The last night the opening calls were 15 20 to 50 higher, I think was the conversation. And I think that was just overly optimistic considering what we have, from an overall carry out standpoint. So, the rumor has hit the marketplace here that Grains will come in and try to purchase, 275 to 375 million bushel of US beans. Okay. When? We have 60 days until the South American bean crop comes off. Brazil at this point in time looks like they're going to produce another record crop. There's a lot of conversation that we could see that crop creep upward towards 129 million metric ton, which is up 10 million metric ton from last year's crop, which is a substantial amount. So, if China were to come in and buy a chunk of beans from the US, but Brazil were to realize this 10 million metric ton larger crop, global supply and demand at the end of the day remains unchanged. So it is nice to see a positive return or a positive kind of result. At least we didn't have anyone, flip the table over and walk out of the meeting and get nowhere. That had been the worst case scenario. But, at this point in time, that tariff's still in place. So we are working to negotiate and try to resolve our trade spat, everything that we've been kind of arguing here for the last 8 months or so. But, reality is nothing has really changed from when we left on Friday, other than we know that at this rate or at this point, the 10% tariff remains and it's not going to become 25% January 1. So that's really the only known. And that's not even a known because we could have, if the administration, and they were pretty clear about that over the weekend, if the administration feels as though China is not working, to properly negotiate, they can change their mind. And so I think that's part of the concern there too, is we're cautiously optimistic, but we're also, to a certain extent realistic, which is we still have a lot of beans from a global standpoint. And, yes, this is positive. Hopefully we work this out. But, at this point in time too, we're still convincing farmers, guys and gals, I guess you could say, to look at growing soybeans again in 19, which is really the last thing we need unless we see a weather scare that takes place, which would reduce crop prospects.
Well, that's, moving away from, I guess, the trade deal, where are we on weather and how are the crops themselves that you're seeing and hearing?
Well, we had a horrible harvest. Typically, harvest for soybeans is wrapped up, on the late side of things by mid-November. A late year is having beans out in the field middle of November. This last week, we had the USDA release their final crop progress number. It showed that, upwards of 6% of the nation's soybeans were still sitting in the field. So an estimated 275 million bushel is still hanging out there. Now, they tend to weather all right in the field once they're there, but it's not the ideal situation by any means. So there is a question if the USDA will reduce carry out based on, maybe some anticipated loss of those beans that are still in the field, maybe a reduction of harvested acres, something of that nature. But that may not show up until the January 11th supply and demand quarterly stocks number. So we'll have to see, what happens with that side. But there is an idea there that we could be down, 150, 200 million bushel perhaps on production due to abandonment, just simply because you couldn't get the beans out. So if you were to see that reduction take place, which isn't a very common thought, at least at this point in the market structure, it doesn't seem to be commonly discussed amongst traders that I've seen. But if that were to happen and you were to see an increase in export demand via China, then we could see a little bit of a bullish spin on this market, and that would probably rationalize where prices are currently trading. The fact is, even if we were to see 150 million bushel reduction in carry out and a 150 million bushel increase in export expectations or something of that nature, we still have the largest bean carry out on record. And like I said before, Brazil's crop will be coming off in the next 60 days. So right now, from a production standpoint, there are some localized flooding concerns that we're paying attention to, but it does at this point appear, most folks in the US will always tell you that rain makes grain. So most of the Brazil crop is planted. Most of it's getting a reasonable amount of rainfall at this point in time. And right now, extended forecasts do appear as though it'll dry out in Argentina just in time for them to get their spring plantings underway. So from a weather standpoint, other than the beans that were left in the field when the snow started to fly, from a global perspective, including South America, weather is relatively decent as a whole, to kind of have some reasonably solid production levels come out of this growing season down there.
Yeah, absolutely. So then, based on where we are, the news that's come out, where we've moved over the past few weeks, is there anything that sticks out at you as opportunities in the month of December, whether it be corn, wheat, soy, or anything else?
Yeah, I mean, I don't want to pile on. I've been pretty negative to soybeans, and it's hard, obviously, for me to talk to folks on the speculative side of things, just simply because it can really kind of hurt if you're on the wrong side for a day or two. If you sell too soon in soybeans and watch the market kind of continue to show strength without the physical product to back it off, it can be quite painful. But for me, talking to my growers and things like that, we are marketing the old crop stuff that's in the bin and working to market some of the Nov 19 stuff that we're looking at. From an opportunity standpoint, I think if we see March corn try to trade up towards that 385 level, which we're only a couple cents away, that's been the recent high here. I think that's I would see, where we close on that thing. But with the D board coming off, 11 cents lower, it wouldn't surprise me to see the March board kind of overtake the old December range. So a 385 value is a decent sale value on the overall. We'll get a supply and demand report mid next week from the USDA. So we'll want to see if maybe they do make some preemptive production adjustments based on the harvest weather and what's going on there. That could create some fireworks overall. Because like I said, we had about 270 million bushel of beans left in the field. We had around 875 million bushel of corn. So, closing in on a billion bushel, that's a lot of corn. It can weather relatively decent through a winter time, but it's not ideal again. So I'll be watching that as a whole. Wheat right now just does not seem to want to do anything, even with the Russian-Ukraine situation last week. Probably want to keep an eye on that. If you see that start to flare up a little bit, then I wouldn't be surprised to see some support tossed over to wheat. But at this point in time, typically December tends to be the slowest time of the year for us in the grain side. And so aside from any sort of updates when it comes to China US news, we should kind of return back to that holiday doldrum type trading period.
Yeah. It'll be interesting to see kind of how we trade this gap in soybeans. Jan beans right now we're trading at 912, up 17 cents, and this is kind of back to the levels that we saw a few weeks ago. I have a chart up. I'm sorry, not a few weeks ago. This is back in August. But this is about the level that we peaked, and then we had actually made a new low, traded down to 8 1/4. It seems suspicious, though. I would have thought, based on the degree that we were trading 1150, 1125 range, then this China news came out, and we traded down to 8.25. So only a bounce up to 920 or so is, not as explosive as I would have thought if the news is as optimistic. We're looking at the global markets trying to figure out how real this trade deal or trade talks are. You take a look at S&P's up about 1%. Fixed income, though, is really trading flat. So kind of a sign for global growth is not taking it as optimistically there. So that's something we're
It's
keeping an
hard,
eye on.
yeah. I mean, we saw the a very similar conversation come out, ahead of Memorial Day here, in May of this year, where there was a Trump tweet that came out that China was going to buy all that the U.S. farmers could produce, and 3 days later he increased tariffs and added more, and so. Yeah, it's you want to be optimistic, you want to be excited about it, but it's hard, just with the track record that we've had, as of late over the last few months with developments on this side, and then obviously with the overwhelmingly negative physical fundamentals that you're looking at with soybeans. It is a rough scenario. So I'm trying to be as positive as I can, simply because my farmers, really could use something to be happy about,
Mm.
just with what we've been dealing with. But at the same time, you don't want to see overwhelming exuberance, kind of Trump, for lack of a better term, reality. And so it's definitely being viewed on our side as a selling opportunity, which is probably part of the reason that you're seeing some of that limited upward movement, is that you're seeing farmers who have billions of bushels of beans as a whole, working to kind of take advantage of some of this from an aggressive sell side standpoint.
On that, so two questions. One is, how bad of a year has it been for farmers? And the second question is there optimism for 2019? Not
Yeah,
market related, more just from the farmer's perspective.
as a whole.
Yeah.
Well, if farmers weren't optimistic, they wouldn't be farmers. You know what I mean? Like that's one of the things that you always have to kind of point out is that it's a darn hard job for very little payout for a few of them. But it depends on the grower, it depends on their situation, obviously. But as a whole, I would say you could almost flip a coin and say it's a 50-50 between you know, farmers in a good situation, correcting cash flow, working their way towards feeling comfortable with what's taking place because they were an aggressive hedger early on, and have pocketed some of these gains that you're seeing, with owning bins and stuff like that. And then there's other folks out there that haven't necessarily done as much as you would like them to see, that they may not be a business. I can tell you that I've been doing this now 14, 15 years, and this is the most I've heard about more farmers getting out this year than I have probably in my career combined.
Wow.
Folks retiring, deciding that they're just not going to continue to throw good money after bad, negative equity situations, stuff like that, where I go back, not negative equity situations, just that they're burning equity, and maybe the kids don't want to step into it. Maybe they have jobs off the farm or something like that. And so, in our neck of the woods here, there's 5 or 6, 7 different guys that have, decided to retire. Retirement is a weird new invention, in the ag sector, simply because it tended to be, in the past, you'd watch a farmer farm until he died, basically. And that's not a depressing thing. They were very happy to do it, to basically work and be in tractors and all of that until the end of their days. And so it is interesting to see that change, where the older generation guys that are in their, maybe their early 60s, have decided that they're going to take their equity and run, let someone rent the ground that they own, and liquidate the assets that go into farming, and move on. So that part is depressing, just simply because you never like to see people leave an industry, especially when you've built relationships with them. So that's hard. There are some young folks that have some optimism, and there's some young folks that don't. But it is an interesting situation that we're in right now. It's hard. Everyone that's in the business will tell you that it used to be fun and it's not fun anymore. And that's not administration policies. That's not, there's nothing anyone can really do to fix it. It's just the change in guard and how life around us has changed to a certain extent. It's not as easy as it used to be. Technological advances and a regulation, regulatory advances and market volatility and things like that have definitely made it quite a bit harder. So there is that feeling. There's kind of an overwhelming sense of, just ugh is the only term I can come up with for that. But, aside from that, everyone's starting to pay attention to what they're going to be doing for 19. I just got off the phone with a gentleman that had marketed a significant portion of his November 19 soybeans because he's growing non-GMO beans that carry a strong premium over top of the market. He's able to lock in $12 cash beans for next year. And he's tickled pink. I mean, he's actually looking at increasing bean acres, which is not, necessarily something we need to see from a national perspective, but it definitely helps with our non-GMO program that we're building here. So, everyone's starting to pay attention to what's going on in 19. We're back to reasonable levels, $4 December 19 futures, $9.50 November 19 beans. And, if you look back prior to the ethanol boom, so if you look pre-2006, 7, and 8, you'll see that the corn and bean market tended to trade in a range. And I would contend that we're going to continue to trade in what is the new range, which tends to run about 325 to 425 in corn. Beans, we're still working to establish that. Is it 8 to 10? Is it 7 to 9? I mean, I guess we'll see as the year progresses, but most folks are kind of getting more comfortable with what they need to do in order to remain profitable, and those that are comfortable with those moves are starting to book 19 and looking ahead to the new year.
Looking at to this new year. It's interesting crossroads right now for ags. It seems like it's been difficult for years and years now. It's not like this is just the past 6 to 12 months. It seems like it's really been for a number of years that it's been a difficult market. So we'll see if that can change anything in the coming months. Would it be higher prices? Would that be, let's say prices were 15% higher across the board. Is that something that would alleviate the stress for farmers?
Certain farmers, yeah. I mean, it's a hard thing because costs of production vary so much. So,
Mm-hmm.
The big move upward and cash grain prices really pushed land costs through the roof. In Iowa and Illinois, especially areas where you can produce these monster crops and elsewhere. Some have been quicker to go back to more reasonable levels versus costs, versus what you can receive from a revenue standpoint. Iowa seems to be the last holdout, with land prices still running between $8,000 and $12,000 on average from what I've seen. So no, I mean, higher costs, the hardest thing that we're running into right now, or one of the tougher things that we're running into right now, is we're in a global market, right? I mean, that's whether you're trading outside markets or in ags, especially, that is more of I don't want to say a newer development because it's always been a part of what we've dealt with, but 10, 15 years ago, the US was considered the sole supplier, the bread basket of the world. And so the higher prices, if you see higher prices on the board, it tends to encourage more production on the global side. And so it's a double-edged sword, so to speak. So, we actually would, more so than higher prices, we need input costs to get down to levels that are more fitting to the current pricing structure. That includes equipment, fertilizer, chemicals, seed, all of this, land, healthcare costs, just your general cost of living continues to go up while everything else, seems to not be. So it's a difficult environment. No one would throw 10 to 15 cents higher prices out of bed for eating crackers, but that's definitely not going to solve the situation that we're in as a whole.
Yeah, interesting. Well, a lot of great information. Angie Setzer, Vice President of Grain for Citizens. A lot of great information. Thank you very much. I know it's a busy day. It'll be interesting to keep an eye on the market. So you said next Wednesday is next big catalyst. Get some actual data.
Yeah, I believe it's next Wednesday. It's middle part of next week. For the updated USDA numbers, I'd have to take a look to see the actual dates. I just always imagine it tends to fall right around the 12th. So it's right in that line. We'll get some updated S&D. Typically, you don't see a big market moving report in December. But the USDA has been really good lately with surprising us or catching us off guard with what would traditionally be minor market moving numbers coming in and no, it's Tuesday the 11th. I just double checked to see. So the 11th
Tuesday.
will be when we get the next supply and demand update.
All right. Well, hey, I really appreciate it. I know you got a lot going on. I'll let you get back to it, but thank you for joining us, and we'll talk to you soon.
Yeah, thanks for having me. Have a good day.